Web3.tv.
Hello and welcome to Web3 Talks. I'm Lisa Amnegard, and today we'll be diving into how companies should navigate the US market at a time when America aims to become the crypto capital of the world. Joining me to discuss this is Elias, managing partner and founder of Moto Legal. So thank you so much for joining me today.
Thanks for having me.
And first of all, I want to ask you, I know that you have been helping or advising companies in the crypto space in the US for quite some time, but how do you get involved in becoming a blockchain lawyer?
Good question, and I can try and summarize it because it's a long story. But I guess I should start sort of where it all started, where I started in Sydney as a sort of more traditional lawyer, then left the law for a couple of years to do my own startup. I lived in San Francisco for a while to do that whole journey, which was great. But in that journey, I met a lot of other founders, particularly in the fintech and blockchain space. And from there, I just sort of was naturally getting pulled into this whole industry. Initially out of curiosity, and then once I realized and understood the value unlock that could come from blockchain technology, I realized that this is the thing that I should sort of pursue full time. So after I exited my first startup, I went back into the law, and very organically, just through the network that I had, being mostly blockchain and fintech founders, I realized that there was a big gap in the market in terms of lawyers understanding the blockchain space, and then also the major regulatory gap that existed then. I mean, we're talking 2017, 2018, Yeah. So right around the time of the ICO boom and bust. So that was super interesting times, and again, that was my first exposure to like this whole industry. But after a while, and after being disheartened initially from some of the first initial use cases, I realized there's still value in the underlying technology.
Well, that's really interesting because not many people know, but I used to work as a paralegal before becoming a journalist. And one thing that the managing partner would tell me at my law firm was, Lisa, as a paralegal, you always have to try to avoid liability. And you decided to take a deep dive into a country, the US, where there has been no laws around crypto or blockchain. So why the US?
In the US, and having been a founder, sort of trying to crack that US market, and having been around so many founders in the US, I realized that this is truly the place where some of the best and most ambitious founders exist and live and sort of want to do business. And the whole ecosystem supports that as well. So, the whole environment around those founders in the US creates a really positive environment for these types of projects to, take market leadership. So for me, I realized that as difficult as the US is to navigate, and it is a difficult regulatory landscape, and there's a lot of risk associated with it, that also presents opportunity. Where there's a problem, there's also an opportunity to do something there. And that's sort of what drove me to it.
Definitely. And now in recent months, we've seen some key developments in the US. We've seen, including the Genius Act, which is set to regulate stablecoins, and then also the introduction of the market structure bill, which will oversee whether a cryptocurrency is a commodity or a security. And many companies around the world are quite excited about this. We have Dubai-based Durbit, who's looking into the US markets. We also have OKX. So as a lawyer, what kind of laws and regulation are you currently looking at when it comes to the US market for your clients?
So first and foremost, and sort of the key regulatory consideration that most of these companies need to consider is the Securities Law and the Securities Act in the US. So historically, at least, still to this day, you need to consider this, but the Securities Act has a Howey test, it's called. It's effectively a test to determine whether or not a specific product, a crypto asset product, is considered a security under those laws. And there are elements to that test, and that's usually the first thing that people need to consider going into the market. The positive thing is the SEC, since the new administration came in, has provided a lot of clarity as to what is considered a security and what isn't, and has also provided additional clarity on staking, proof of work, and proof of stake staking. So these sort of clarifications by the SEC in themselves have created a much more comfortable environment for these companies to operate in. That's the first thing I would look at. The next thing is, what use case are these companies wanting to sort of proceed with in the US? And so depending on the use case will also depend on which laws we'll look at. So if they're wanting to issue a stablecoin, which is now super popular at the moment, okay, we're going to have to consider the Genius Act and the types of obligations that these companies will need to comply with. While it's not in effect yet, I mean, you need to have an eye for the future and obviously plan for that. So that's one thing I'll definitely look into. The other thing is the Clarity Act, which you mentioned as well, which provides a lot more clarity as to market structure and which regulatory framework these assets will primarily sit in. Currently, it's in the House at the moment, and it still has a long way to go. But currently, the CFTC and commodities law will primarily have jurisdiction over crypto assets, which, in my opinion, is the correct assessment, because most of these assets are what they are. They're assets, and they should be regulated by a commodities regulator. And that doesn't mean the SEC is out of the picture, of course, because the SEC does regulate investment contracts, which, if we look at the history of crypto, there have been quite a lot of these crypto assets that would fall into that category as well.
That also leads me to my next question, because we do have a very crypto-friendly administration in the US right now. And we have seen the SEC chair, Paul Atkins, pardoned or even dismissed many cases that have been in the spotlight in the US over the past few years. And also with the comptroller of the US currency, Jonathan Gold, they're very favorable towards crypto. So my question is, do we really need these laws in order for companies to feel secure in the US market? Because it seems like it's working in their favor right now.
Yeah, it's a good question, and it's one question that I have a good debate with some of my legal peers as well. We'll start off with the clarity that's sort of come out recently from the SEC in particular, and it should come as no surprise to most lawyers who know what they're talking about that clarity is spot on in terms of how the SEC has described what is going on in the space and then how it fits into the securities law. It's my belief definitely that the new laws that are being proposed genuinely exist to plug in the gaps that exist. And I think that's a credit to the administration and people in charge there, because they haven't gone ahead and come with this heavy-handed approach to regulate anything that is a crypto asset, right? So I think the laws that have come out, the new laws that have come out, have genuinely plugged a gap. And for me, I think they'll provide a lot more clarity and a lot more structure around stablecoins, definitely. That's definitely coming through. But also it gives a lot more confidence on these crypto projects to enter into the market, and they know exactly where they stand. There'll be regulations that govern how they market their products.
Yeah. And how important is it for these laws to come into place before midterms, for example?
I'm not sure exactly how what the impact is on that urgency, but I think it'll be a really strong showing from them if they get this passed before the midterms, because they've made these strong promises, and obviously not honoring those promises and not honoring those commitments will, question whether or not you're able to execute and deliver on this. But I think so far they've done an awesome job in terms of speed and execution, and I think there's definitely incentive for them to do that before then.
And you've been involved in the crypto space in the US, but you've also worked in the UAE and many other countries. So from your experience, do you think that the US is able to become the crypto capital in the world, or do you think that they should be looking at, let's say, other countries and what they're doing from their legal standpoint?
My assessment of that would have been different had Trump and this administration not been sort of elected and pushed this crypto-friendly agenda. Because the US was losing a lot of ground prior to that. And again, I have a lot of friends and clients in the space. Prior to this administration, the US was like a no-go zone. And almost, it didn't necessarily need to be that way, but because it was so tricky and so difficult, and the risk of regulatory action against a company that did well, it just made it totally not appealing for any company to operate there. So they just crossed out that part of the world and said, all right, we're not operating there. We're going to move our operations to Dubai, which is still a favorable destination. So had the Trump administration not come into effect, then yes, I would have seen that. I think we would have seen that trend continue to exist and people sort of avoiding the US. But now, with how strongly the administration has made up ground, I think it's definitely putting itself back in contention to be the crypto capital. The thing that the US has, it's sort of outside regulation in my opinion. The thing that the US has is, it sounds cheesy, but they do have an entrepreneurial spirit. It's an entrepreneurial spirit that I see here as well in Dubai in particular, where you're just attracting go-getters, people who are trying to do amazing things, build amazing companies. The US has had that for a long time in cities like San Francisco, New York, Miami to some extent. But you're definitely, that's why the US could be the crypto capital. And if they just provide a relatively stable foundation in terms of regulation and rules, well then they can let that spirit sort of flourish.
Yeah,
that's all it needs to do.
Yeah, and what won't matter whether it's a different administration, the laws will always be there in place for companies to rely on to some extent, I would assume.
Yeah, unless they start to pull back on some of the stuff, but hopefully it gets passed into law, and once it gets passed into law, good luck, it'll stay there.
And I just want to ask you, how has your approach to advising crypto companies changed since this administration?
Yeah, good one. So as I mentioned, a lot of companies would just blanket rule out the US, which even in the previous administration, I never was an advocate for. I said the US is a big market, so you should definitely consider it and not just cross it off. The good thing for these crypto companies was that they had such commercial advantages in the jurisdictions that they were operating in that they didn't even need the US. So now that the US is more friendly, the risk of enforcement is greatly mitigated. And while the law hasn't technically changed yet, the enforcement risk has mitigated. So there's multiple levels. There's the law as it's written and the law as it's enforced. And the law as it's written hasn't changed yet. It is changing, but it hasn't changed yet. But the law as it's enforced has changed significantly. So my clients and other companies in the space have now operated with that confidence to just sort of go back into the US market, do what they want to do. In some cases, they've taken it a little bit more to the extreme where they've run the risk a little bit. But from my perspective, it's opened up the US to these companies again. So
it's good for business for you.
Yeah. It's been very busy. Definitely.
And what about when it comes to innovation? I saw recently that there's been now a trend when it comes to establishing Bitcoin treasuries, and often through these reverse mergers. So can you talk to me a little bit more about this trend and why we're seeing this?
Yeah, I've been seeing this as well, and we've had a few sort of new clients come to us and expressed interest in doing something like this. This, if I'm going to simplify it, and I think I should for the sake of your boredom, but it allows people to access, it allows the public markets and other institutional investors to indirectly own and have exposure to Bitcoin or other crypto assets in a way that they wouldn't otherwise be able to. Because interacting directly with more crypto native service and actually dealing with those assets is something that these big institutions aren't ready to do yet. So these reverse mergers, or through SPACs, so we spoke about this earlier as well.
In order to go public, right?
Yeah. So these mechanisms allow people to allow those companies to access public market funds, and that's, in my opinion, the primary driver behind all this. It is tricky to do because this is now totally a regulated type of practice that people have to go through. But if the opportunity is there, then the law exists to allow people to do certain things in a prescribed manner, and people will do it. And it's just how strong is that commercial interest. That'll determine whether or not people go down this path.
We've seen kind of these like zombie companies now going public or being activated. But in terms of the key benefits of having a Bitcoin treasury, tell us a little bit more about that.
Yeah, I mean, depends on who you listen to. I listen to guys like Michael Saylor as an example, and people sort of drumming the same beat as he. I believe in the underlying asset of Bitcoin. I think it's sort of this now somewhat naturally existing commodity that no one person can control, which is a great thing, especially in this world. So if you believe in the idea that Bitcoin is this sort of naturally occurring thing that will only get more and more scarce, then your general view should then be, okay, well, this asset is only going to increase in value. While some of the use cases might not be apparent, that store of value narrative is definitely something that I think appeals to a lot of people. And by owning Bitcoin, either directly or through this abstracted process of owning shares in a company that owns Bitcoin and having access to that in your treasury, is appealing, and it definitely allows these companies that own multiple assets to at least have some exposure into the market, so that if this thing does pop off again, which it does multiple times, at least they have exposure into it, and their sort of risk profile is mitigated through the use of that intermediary.
Yeah, I wanted to ask a little bit more about that. So does this kind of Wall Street style holding company model change anything? Because these companies are now holding Bitcoin. So does this change anything from a legal point of view when it comes to securities laws?
Well, it's important to draw a distinction, which sometimes people conflate the two things. So the Bitcoin as the actual asset is not a security, right? I can say that pretty confidently, even though there's been some debate historically about this. It's pretty clear now that it won't fall under that category for multiple reasons, but Bitcoin, again, is this sort of naturally occurring thing with no issuer, effectively. There's no person issuing the product. So Bitcoin as the underlying asset is not. The businesses that allow people to gain exposure to that are securities. So the underlying thing that gives that security the value, that layer is a security or is regulated in some cases by commodities law. But that part is a security, and the way that those businesses serve as the layer on top of Bitcoin, that will introduce some regulatory obligation on them for sure, under existing securities laws. But also with the introduction of the Clarity Act, it may introduce another subset of laws that govern securities that are crypto asset backed.
Yeah.
So there will be some regulation around that, I would expect. But for now, in my opinion, there is enough for people to sort of comply with, and enough to keep definitely institutional investors safe. And I think there's maybe a little bit more to keep retail investors safe. So your everyday mom.
Yeah, because we've seen now this reverse merger happening with Tron, with SRM Entertainment. We've also had ProCap's SPAC with Columbus Circle Capital just earlier this week, and Nakamoto's merger with Kindly MD. So do you think this is just the beginning, or is it just a hype?
Definitely a bit of both. is my politician answer. But yeah, it's definitely appealing right now. It seems to be this pretty big trend that is going on. I think it's a way for these institutional investors and public market investors to enter into the market and have exposure into these underlying assets really quickly. So there is sort of this sort of short-term opportunity seizing that's going on right now. How long it will last, I think it always exists to some extent, because some institutions will never fully engage directly with the assets or directly with crypto native sort of service providers in this space. So I think there will always be a place for it. How strong will the demand be? It's really hard to say right now. My general view at the moment is that it's a bit of hype and it will cool off a little bit, but they'll always exist, in my opinion. But I think, yeah, there's a lot of hype going on at the moment because it's like this initial first mover value capture type of narrative.
If we also just think about hype, I want to take the conversation back to stablecoins, where it has kind of been a very US driven story so far. I haven't seen as many in other countries people pushing stablecoins to the same extent as we've seen in the US. So if you're, let's say, a company looking to operate in the US, how difficult or easy is it to issue a stablecoin with the Genius Act hopefully coming into effect very soon?
Right. It'll be difficult. I think if you're a new entrant, depending on who you are, will determine the level of difficulty. So regulation does two things. It provides a lot more clarity and structure, but it also usually benefits incumbents / the current market leaders. So current market leaders in terms of USD stablecoin issuing is Tether and USDC. Tether being the most widely used, Tether being the company, and then USDC Circle, sort of not as widely used and doesn't have as much circulation as Tether, but has established itself as complying with the highest possible standards, making them a perfect company to take advantage of the new regulations. So those two are definite winners. Circle being a massive winner, gaining what I believe to be a lot of ground on Tether now that they're sort of well positioned in the US market with the stablecoin regulation. For new companies wanting to issue stablecoins, it'll be tricky, especially if you want to access the US market. So I think accessing the US market will be quite difficult, just based on the sort of requirements that they have. But now, depending on your business model and depending on the resources that you have available to you, you now have a rule book. So now you know exactly what you need to do to issue stablecoins in the market. Trying to find a competitive advantage over USDC and USDT will be tricky, but I think, and this goes to my broader payments experience, payments relies on how accepted they are. So you could have I think we spoke about this earlier, but like a Walmart type of company who accepts payments from millions of customers daily. That's immediate demand for payments. And if they want to introduce their own stablecoin method of payment, that's an amazing distribution access opportunity. They could do it directly themselves, or they could use Circle or Tether possibly in partnership and sort of deliver a solution there. But new entrants, like startups, I think are almost excluded. It's just way too difficult. You'd probably have to issue stablecoins maybe in another jurisdiction, serving a different type of market. But doing it in the US, I think it's now sort of elevated into that really established institutional level type of customer.
Yeah, if you have people like Amazon and Walmart looking to issue their own stablecoins,
right,
and you're a startup, it's a quite difficult battle.
You won't
but
be
it
able
will
to.
come, I think for me personally, I do think it comes down to how widely adopted stablecoins will become for the mainstream. Because at the end of the day, if I'm on Amazon, I can pay with a credit card or just with whatever payment that I please. And usually with credit cards, you get a lot of different incentives. So it's if stable coins don't give you as much incentive, I don't know how many people would make the switch.
It's a good point. You talk about incentives, and this is super important as to how the Genius Act is structured. So the Genius Act expressly prohibits any stablecoin issuer to pass on interest or yield to their customers. So meaning if you have stablecoins, I can't see a way around this. A stablecoin issuer can't allow you to, gain interest on those holdings, which was a big incentive for people to use stablecoins. But now this regulation is specifically sort of rejected that. And in my opinion, that's what was one of the key things that allowed the bill to pass. Now, again, it begs the question, okay, well, where is the incentive? And the incentive could be through the efficiency that the issuer can create for merchants and people who need these payment networks. And there's enough efficiency and incentive in that. But on the end consumer, it's a good point. How does that value pass from the issuer, the merchant, and then onto the consumer? I think it eventually will pass onto the consumer in some form, but it won't happen directly. So, and again, that express limitation of not passing on yield and interest is a great example of corporate lobbying in the US. It's perfect. So anyway.
And finally, I wanted to ask you about what are you most excited about going forward when it comes to the crypto industry in general in the US?
I like the fact that now founders and entrepreneurs in the US, who are, in my opinion, again, are among the most ambitious founders there are. I'm not saying that out of bias, I'm Australian, so it's just what I've generally observed. Now there's a lot more clarity, and the rules are at least better understood by everyone, not just lawyers, but everyone in the space. So the entrepreneurs are much more sophisticated now than what they were initially. Some of the cowboy behaviors are going, which I'm thankful for.
It's a headache for you as a lawyer.
Yeah, well, I mean, it's a headache, and it was also a benefit sometimes, because these cowboy behaviors were good economic activity and commercial activity, but it never sat with me in what I truly believe in, which is, the whole reason why I got into tech and the whole reason why I do what I do is to help people create value and valuable products. And that's really what excites me. So now that a lot of the cowboy behavior, hopefully a lot of the nonsense hype cycle stuff is sort of coming to an end, or at least will somewhat be regulated and sort of the harm will be mitigated to some extent. Hopefully that will deter these guys from focusing on that type of money grabbing stuff and focus more on sort of value creation.
So if anybody wants to reach out to you and get more clarity around the regulations in each country, how can they find you?
Yeah, well, you can find us at the website motolegal.io, M-O-T-O legal.io. I'm on LinkedIn as well. I'm sure there'll be a social link somewhere, but you can find me on LinkedIn. It's one way of reaching out. There's a public access email on the website as well that you can reach out, and the request will come to me or someone in my team. But yeah, we sort of focus on those three jurisdictions. My key focus being the UAE and the US. We haven't talked too much about the UAE. There's a lot of great stuff happening here. It's probably another conversation for another day. But the UAE operates very differently to the US, which is actually very interesting. Keeps me very dynamic. But I guess you can reach out to me on any one of those socials. And again, depending on what clients and these projects and founders want to do, the way I like to approach it is sort of, I'm not biased toward any jurisdiction. I've picked Dubai and New York to focus on specifically because I believe they're going to be the two major hubs that are going to emerge. If you want to operate in the US, you're just going to have to deal with the US and be in the US. And if you're going to operate for the rest of the world, this is one of the best places to do it. This in Singapore, but I'm a bit more bullish on what is happening in the UAE and in particular Dubai. So
Yeah, I spoke to Bilal Jassoma from the DMCC
yeah.
last week. And what's really cool, in my opinion, is that in the UAE, you can essentially knock on the door of the government and be
Right.
like, hey, I have an idea. And they're interested to listen to you. And they will provide you the resources or the roadmap of how you can actually achieve that goal, which I think is pretty cool.
It's great, and it's so different to how the rest of the world operates, especially common law jurisdictions and the more established ones. But the UAE has other advantages, like it's a blank canvas.
www.motolegal.io, that's the best way to find you, and LinkedIn. It's been a pleasure speaking with you, and I hope to speak to you soon again.
Yeah, thanks for having me. Appreciate
And that's all that we have for you today on Web3 Talks. I'm Lisa Amnegard, and thanks for watching.
Web3.tv